All right, excellent. So actually it's okay, excellent. All right. Well, okay. So get started. Hey guys, welcome to this week's podcast episode and I've got a fantastic guest for you today, Brian Moody, and he's going to talk to us about infinite banking, what it is. Again, this is not financial advice. Do your own research and we've had a couple guests before Brian talk about it and kind of just introduce the concept to you and see how you can apply it. And so, Brian, welcome.
Thank you. Thanks, Chris. I appreciate the opportunity.
Yeah, I know, what's really interesting is I was thinking over the weekend, how inefficient capital is. Like, for example, you pay off your house and it just sits there and you're paying property taxes every year, or like your portfolio, your stock portfolio is just sitting there. There's way to leverage that in more advanced ways. But talk about you and how you got into IBC, what it is, and we'll delve into this discussion.
Yeah, I'd love to. So I've always been interested my entire adult life in personal finance. And I'm still with a part-time with the Air National Guard, a pilot in the Air Force. So on a deployment a number of years ago, I just kept coming across this book on my Kindle app that said, books recommended for you. And it sounded hokey. It's called Becoming Your Own Banker. And I thought, you can't become your own banker. What does that mean? So I kept dismissing it, and it just kept showing up as the number one book. Finally, I was like, all right, it's $11. I'm going to read it. And I read it, and it changed my life. So I got home from that deployment and started implementing this. And over time, it literally changed the paradigm of how I think about everything money, and completely shifted me from all the conventional teachings on finance, not all of which are bad, but I've now started to come at them from a different angle. And a couple of years into that, into practicing it for me and my family, I decided, man, I'm so passionate about this. It's what I should teach. It's what I should do. It's how I should transition from the military into civilian life.
And I really love that journey because the more I study finance and we can use the existing legacy institutions but for the majority of people, these legacy institutions, government banks, institutional Wall Street, they're using people to make their money. So I love this idea when we can take ownership, we can use the system to help ourselves. So what is IBC and kind of talk about how you can apply it to real estate or other avenues.
Yeah, sure. And like what you're saying, it's pretty wild. I mean, I'm not exactly sure of your age, but I have a feeling we're pretty close. I'm like right on that line of kind of Gen X millennial. So I was an adult and lived through and had investments 2008, 9, and 10. And if that didn't teach you something, coupled with the last 3 years of our life and everything that we've all lived through, like that the government's lying to us, the institutions are lying to us. Nobody really has our best interests at heart, other than small time things. You and your family, and we're surrounded by lies and deception. So like what you're saying is, everybody wants to control the narratives. They want to control what we do. They want to control our money. They want to control so much, right? So what the infinite banking concept does is it gives you a much higher level of control, and it really resolves a certain problem. And that problem is that we finance. Nelson Nash said in his book, we finance everything we buy. So we either pay interest to some outside lender, or we give up the opportunity for our money to continue earning interest if we pay cash. And so, well, everybody, he says in his book that if you get a couple guys around the water cooler, or in the break room in a hospital, what do they talk about? They talk about their rate of return, right? What they got on their money, but they're sending 20 some percent in volume or more, 30% of their money out the door in finances. So what if we can solve that? And that's what the infinite banking concept does. It utilizes specially designed whole life insurance to solve that problem. And I'm happy to give some examples like you asked. But it looked like you wanted to say something.
No, I was just it just reminds me of because this IBC and then kind of you have gold bugs, but gold is very inefficient. You can't look like if you're gonna 10,000 or whatever worth of gold, it's gonna draw a lot of alarms. And but there's like technological solutions to these problems that are currently in play, still very early. But and I love this idea of just self custody and you control as opposed to they controlling you. So talk about the legacy planning and long-term financial health, and you emphasize the importance of thinking generationally when it comes to finances. And what is legacy planning, and how can you start doing that with IBC to benefit you, your family, and future generations?
Yeah, absolutely. So, the first thing when you talk about the conventional planning, it's like we all get out of, or whenever we start earning a living as adults, what's the first thing it teaches us to invest, right?
Yeah.
And really the first thing we should be taught to do is save. Because if you could save, you're going to get ahead of the game. Even over the long run, you're always going to be ahead of the game, and you're going to live peacefully when you know that you have something to fall back on. And so on the legacy side of that, what the infinite banking concept lets us do is it lets us save methodically. And unlike conventional planning, then we can access that money throughout our lives to do all the things we do through our lives while leaving that generational legacy. So the legacy side of it is, and we couple this with building trusts, revocable living trust, and other methods. But on the generational side, you're going to leave an income tax-free inheritance that cost you pennies on the dollar throughout your life.
Mhm.
And through your life, you're going to have access to those pennies. So instead of locking your money away your entire life like a 401k does, or most stock things, most people aren't going to pull their money out of their stocks to buy a car, right? Because it just doesn't feel right. You're going to lose too much. We
Yeah.
have access to the money. It continues to grow as if we have never touched it, because we're going to leverage that money within the whole life insurance policies. And whenever we walk off this earth, when we graduate from this earth, it's going to transfer to our loved ones, our kids, our wives, or whatever charity we want to give it to. So it starts to create that generational legacy. And if
Yeah.
we teach our family to do the same thing we do, we're 3 generations away from everybody in our family being born into multiple millions of dollars without ever having to worry, as long as we can keep that legacy going and teach those lessons to the next generation.
Yeah. The other question I have is because you talk about these whole life insurance policies, and again what's interesting is basically capital efficient. For example, just like how about a cash out refinance on a property? Is that fall within the infinite banking concept? Because I know a lot of investors do that, and it's just basically recycling the capital, putting it to use. What are your thoughts on that?
Yeah, it's very similar. And I think that's a great thing. And I own real estate as well. It's my favorite thing. Excuse me. It's my favorite thing to invest in. Uh, and it's a phenomenal method that we've seen work for many, many, many investors until it doesn't. And the reason it sometimes doesn't, and when it works, it works. But there's two major problems with the cash out refi, the Burr method, if you want to call it. And I
Mhm.
do think it's phenomenal. So I'm not even taking away from it, but nobody talks about the detraction of it, or why it sometimes doesn't work. One, we can get over leveraged. And when 2008 happens and people were over leveraged, a lot of people got hurt.
Yeah.
So if you take it too far, it can harm you in that way if you're not careful and you're not smart and you don't understand the investment. And the other thing is, who is in control of that loan? When you leverage
Mhm.
that cash, are you in control of it? Are you
Mhm.
in control of the outcomes? You've given up control to the bank,
Mhm.
because they're going to tell you how much money you have to pay back, how
Mhm.
long the term is going to be, when you're going to pay it back, what the rate on that's going to be. And if something goes wrong, who owns the property?
Well, I mean, the bank, of course.
Of course owns it. So
Yeah.
that's what puts you at risk. Whereas when we build capital within these whole life insurance policies that are designed to build capital quickly,
Mhm.
when we leverage that instead of the bank, one of the most wonderful provisions to it is you are first right access to that capital with a loan provision that is completely flexible, that you are in control of. So there's no repayment plan required, because that is leveraged money. The insurance company can't lose money by loaning it to you, because they're leveraging the capital that exists in your contract. So what
Mhm.
that means is, if you have to stop payment because something goes wrong, you have a tenant that destroys things. If you rent your property and 4 months later you still don't have a new tenant, then you can stop repaying on that loan for a short period of time. The interest rate is it's an extremely favorable type of loan. I like to describe it as a simple interest loan that compounds annually. And what that means is, through the year, all of your payments are 100% principal. And at the end of the policy year, they're going to calculate that loan and by the daily rate and tack it on at the end. So imagine if you could do that with your mortgage and you didn't spend, 70% of the money on interest and 30% in the beginning years on principal. And yeah, that unstructured loan provision, you can stretch it out 30 years, you can stretch it out 15 years. The point is you are in control of the entire equation.
Mm. I love that. And how does it because there's also other vehicles I hear people borrowing against their 401ks and very similar in that case would you lose control or does the does like for example Fidelity retain custody of those assets or talk about that?
They do. So whenever you borrow against or from actually you borrow, not even against, you borrow from your 401k. So just for easy numbers, let's say it's $100,000 that you have in a 401k and you want to borrow 50. The most standard thing is a 3-year term on that. And so the company is going to give you 3 years at their interest rate, at their repayment schedule for their length of time. And if you mess up on any of that, do you know what happens?
I've never been in that situation, but I'm curious. The audience would love to hear what happened.
If you borrow from that, there's a couple things that can go wrong. If you leave that job with the 401k, well, the term repayment ends. So you either have to pay it all back in lump sum, or they're going to charge you 10% fee on what's outstanding and taxes on the outstanding balance. So that can become a pretty hefty bill. Now, I only talked about 50,000, and they also do have limits. I don't recall what the current limit is. I'd have to look that up. But the point is, like that can become a quick and sudden tax burden that you weren't expecting because you have that money deployed into another asset. So it can be troublesome. I mean, they can be great and they can be troublesome. Yeah. If you've taken your money out of the market and it explodes, you lost out on those gains.
Right.
So there's a couple of things to think about there where you have once again given up control of that money to somebody else.
Yeah, interesting. The other question is, for example, the challenges with conventional financial planning, and a lot of the audience out there, they've got financial planners, but from your perspective, what are kind of your limitations of typical financial planning approaches, and how do these IBC address these issues and offer more sustainable financial future?
One of the major things with typical financial planning is that it offers one solution. So they want your money, they want it on a regular interval, they want to hold it as long as possible, and then they want to disperse it as slowly as possible at the end, right? So who wants control of your money? And the question is, what are they doing with it?
They're buying mansions and yachts and throwing
and they're like, and within the funds, they're moving it, right? They want you to park it with them so they can move it. So where's the just like blood, just like water, like it gets unhealthy if it doesn't flow, right? Same with your money. So when you just park it, it's not doing as much for you as it is for the people who are actually making it flow.
Yeah.
And so, comparing that, now they want to do one thing with your money and lock it away until typically 59 and a half up to 72 years of age with infinite banking concept. And I'm not opposed to that. But the point is you can do both. And with the infinite banking concept, you can do both within. I can save my money in a guaranteed environment that can never go negative, that has a phenomenal return, better than most any other savings environment, and leverage it to do those investments, and leverage it to buy cars, and leverage it to buy real estate, and use it. So I can start using those dollars in multiple places at the same time. And nothing else that I know of gives me the safety of those options that later down the road is going to provide phenomenal protections, and it's creditor protected while it's in there. So you just get all these phenomenal benefits, and I can do both.
Right. Yeah. Really fascinating. And then talk about so how can people contact you and follow you and reach out to you and check out the book? I know you referenced that, and those will be in the links in the show notes. And how can they follow you on social media?
Yeah, Becoming Your Own Banker by Nelson Nash. You can find that at infinitebanking.org. My current website, I'm not sure exactly when this is going to air, but it's perennialwealthconcepts.com. But it's rebranding. So in about 2 weeks, we're going to be rebranded to remnantfinance.com. And so it'll depend whenever you folks listen to this. If one's down, check out the other. You can find me on Twitter at bmood135. And that's actually the same for every social media channel that you can think of.
Yeah, I love that.
We'll have a podcast. The first episodes are coming out in May. Remnant Finance as well.
Yeah. Yeah, and thank for all the audience. Let's thank for coming on to the podcast, and be sure to give his socials a like and follow, and check out Brian's links. And thanks so much for coming on.
Awesome. Thanks.